Real quick, before we jump into the show, we created the Collecting Keys podcast to be a real estate investing podcast that is created by real estate operators for real estate operators. And we want operators everywhere to know what it really takes these days to be successful in this business, rather than all the fluff that all the other content creators and podcasters out there make. And so one of the challenges with this is that it's challenging to grow because most operators are too busy out there working, right? And they aren't always learning or actively seeking new learning material. And so if you could please share this show with any fellow operators you can text it to them, you can post it on your socials, you can leave us a good review that you then share somewhere. That would be amazing. But really, whatever, it really helps us continue to get excited to create content. And it will also help you because everyone that you expose us to will get better as a real estate operator and close more deals. So if you could do that for us, it would really mean a ton. And otherwise, we appreciate you guys. And let's get into this episode. We went against my own advice where I'm always like, don't get into these big flips.
Who's your guy that does your massages?
All right, we're starting the show with that. Jesus.
I know you got a guy, Dylan.
What is going on, guys? Welcome to today's episode of the Collecting Keys Real Estate Investing Podcast. This is the show by real estate operators for real estate operators, so you can continue to grow and expand your real estate business during this ever-changing market and economy. For this episode today, we have a pretty fun one. We're going to be going through a little Q1 review, looking at numbers, kind of things that have worked to start off 2025, things that haven't. This is your first time to the show. I am Mike DeHaan here with my co-hosts, Dan Austin and Dylan Cook.
Hey.
And you can ignore that little quip that Dan started the show with. He just he's really into massages and deep tissue work. So he just always likes to know.
You guys just like to fuck with me. That's what it is. It's about once a show. So
just want to see what Dylan says.
But hey, we don't judge here, Dylan. You do you.
Well, there is actually the reason why that popped in my head, because there is a connection to off-market real estate here. So,
and getting your male massages?
Yes. So, one of our buyers that lives in your neighborhood, his massage therapist that goes to his house is the tenant of that Spanish style home on the South Hill we could not wholesale because the tenant was such a butthole. Like, it was such a problem. We couldn't get in and out of it. You remember that one?
Are you serious?
Yeah.
God, what a small world.
It was so weird on so many levels because I've met this guy and I'm like, dude, you let him in your house and he massages you?
How did you even figure that out?
I don't remember.
Dan was looking for his next massage.
Yeah, right.
I was like, hey, this guy looks familiar.
Yeah, you just go in.
He's got a 5-star review from my guy.
God, maybe that's why we've had some deals falling out of contract. You keep propositioning all the occupants of the home.
I've tried to get massages. But anyways.
Yeah, that's weird as fuck. So anyway, I don't know where we go from there.
KPIs, baby.
Yeah, we're going to dive into some marketing KPIs, some strategies and trends we've been seeing to start out the year. So we're going to get a little bit in the weeds and talk some numbers so you can kind of have realistic expectations around what it's taking to be successful in this business right now. It's also a pretty appropriately timed call because we had a scale call this morning, and it's always interesting to hear. I see a lot of people start to do this when they have some lulls in their marketing and their business. So it was interesting to hear how people try to completely just drop of what has worked in the past when there's a little hiccup and try to do something completely different. So on our scale community call that we had today, we had one guy, and he was talking about how he's trying to take his teeny tiny marketing budget, honestly, and split it into these different markets now because he had a down session in one market. And so now he's trying to spread it out. Yep. And would you guess what happened? All of it failed. Right? They basically took the little tiny piece that wasn't working and spread it everywhere and got even worse results. And so what I did is I called on Dylan on that. And I said, Dylan, what does your business currently look like? And he did exactly what I knew he would do. And he outlined his perfect consistency that he's had. It's very narrowed and focused and essentially challenged this guy's view and showed what success can actually look like with this business.
Yeah.
So we're going to dive into the kind of marketing they've had the most success with, the cost per lead, the cost per deal, what our typical revenue and everything's look like, so you can kind of know if you're on track with what we're doing. And if you guys have any, feedback or you want to know how your numbers look like, you can feel free to send me a DM on Instagram, Mike_invest. And I'm just curious what other people are seeing in this economy as well. So Dylan, we'll start with you. What's your kind of overall, I would say, marketing look like, your conversion rate, everything else?
Yeah. So right now, we basically have I guess technically 3 channels, direct mail being the number one, and that's still like $5 to $6 a month in spend. I have 1 cold caller that's through Aaron Beal's company, actually. And I think that's like $1,200 a month. That's pretty new. I think I have like 30 total leads from them. Actually, I tell you, 42.
That's cheap. What a good price.
Yeah, it's not bad. And then PPL, and that's also rather new. So all in all, we spent like close to 30 grand so far this year.
Okay, about 10,000 a month.
Yeah.
Cool.
This is what it kind of breaks down to. And the total leads is 116, 42 from cold call, 44 direct mail, 28 PPL, and 2 referrals. So that breaks down to like a cost per deal, like $200, essentially is what it comes down to. If you blend all those together.
Cost per lead at $200.
Or sorry, cost per lead about $200. And that's with like 11,000 spent in PPL with no deals.
Yeah, that's awesome.
Yeah, I was going to say, have you looked at like how you break that out because like obviously cold calling, your cost per lead is 1,200 divided by 42. Is that the metrics there? Yeah, like it's pretty low, probably. Yeah.
It's very low. But how we talked in the show, there's cold calling is more quantity than quality, whereas direct mail is probably more quality leads, but definitely getting more there.
Have you closed any of those yet?
No.
So
what we'll get into is so I've had a pretty good Q1, and I'll just say the top line revenue is $257,227.73.
You're rich. That's awesome.
That's great. Off of 30,000 total spend. So you have your, I guess, not quite. You have your ROAS of 1,000, 19%. Is that your math right? Because if you're 30,000 spend, you're at 250K, you'd be at like 900%. Like 9x.
It's pretty close to that. And the reason why it's a little different is like some of these are like the referrals in there. Referrals don't have a cost.
They jack it up. Yeah.
So that kind of throws it off a little bit. And the other thing I was going to say is the leads that I closed in January, some of these are like old SMS leads that have been in the system for a long time. So that also kind of throws off the numbers.
The Simply leads probably got for you last year.
Yeah, probably.
They probably are leads.
I mean, they very well could be.
Yeah.
Hey, can you throw me a bone on those?
I paid you enough for what the service was there.
You did. You were a good client.
You should count those though, right? It's funny. People always get weird and they want to know like the quarterly return on their marketing, which I think is important. But the total closing cycle in this business can vary such an incredible amount.
Mm-hmm.
And the one thing I can tell you is that when we, last year and the year before when we were in this big national business, we would always see a massive, I would say, increase in effectiveness in marketing and just like general better return in months like 4 and 5 versus the first 3, right? And a lot of that was because, our typical time from like a lead coming in to actually signing a contract was like 60 to 70 days.
Yep.
And one of the biggest challenges I think when people are starting this business is they try to go like month to month where they're looking at like, this is what my return is for this month for this marketing spend. When realistically it's always going to be higher if you're working your lead funnels appropriately, right?
Yeah. And if you've been in business for longer than a year, that you have a little bit of a stack to use.
Totally.
Exactly. And as we've talked to so many people on this show, we did weekly interviews for years on this, and the good operators that we would have on, we would always ask what their cost per leads and cost per deal was. And they were always kind of in the same vein. And whenever it wasn't in the same sort of zone, you knew that they were lying to you in some way, right? Like they were exaggerating, or they were like talking about signed contracts, but you didn't know they had a 50% drop rate or something. Like all the confirmed people kind of fall in like a similar cost per deal and cost per lead. And it'll vary as much as like 50, 60%, but you won't see anything that's like drastically lower or drastically higher.
Yep.
And so, so you have your cost per deal of 1953, 13 assignments and 1 flip.
And that flip I had bought back like October of 2024.
Cool. But yes, that's revenue that you're claiming.
So that's 1 flip closing on the sales side.
Correct.
And have you bought flips since? So do you have like other contracts?
I have 2 that are in the rehab stage right now. Yes.
Perfect.
Okay. So that would bump you up to like 15 or 16 contracts or something like that on total.
Correct. Yeah, those are not counted. I usually don't count until I sell them. So
nice. So do you have your projected revenue on that 250 number? Like from those flips?
Yeah. So we have 2 assignments. One's 20. Another one is about 15. So that's 35. And then those flips should make about 35 each.
Cool. And those are in here, that 250 number?
No, they're not.
Yeah. So those are just projected.
They're not. So you should add those though. Because that will be, I mean, even if they vary a little bit, right? That's kind of how you determine. So your return on ad spend's even better though.
If you count those as projected revenue, then yes.
Totally. Yeah. I mean, like, even if the market drops or you have some issues or things that happen, you can still kind of get in the range, right? Like, you're experienced enough that hopefully, unless something very drastic happens, you're not going to have a $35,000 shift that makes your flip go to zero.
Yeah, I hope not.
Golly, that would suck.
It could happen. I mean, that happened to us in 2022. The biggest loss we ever had, it was supposed to be like a $60,000 profit and turning into a $150,000 loss. But that was also an extreme situation, you know?
Yeah. So both of those, I mean, I'm usually pretty close with what we come in at this point. So, I mean, if you count both of those would be good.
Another 70 grand.
Sweet. Yeah. I mean, you're right on track. And for your little, one person business, you're crushing it.
Yeah, it's been good. And now that we brought Tony on, which is my AM, like I'm finally starting to get the CRM caught up where I'm just like hoping that I felt like the past 2 weeks I've kind of taken a step back, but it's that whole take a step back to take 3 steps forward kind of a thing.
Yeah.
And, once we get the ball rolling here, now my job goes from acquisitions to how do I feed them more leads and, coach them through that process.
Yeah, totally. But you'll be a business owner. There you go. Yes, that'll continue to grow.
Yeah.
But
earning my wings once a week.
Yeah. But what'll be interesting is what you do tend to see happen is you'll have a slight increase in cost per deal. Efficiency will drop, right? Because things, there won't be quite as much care as you'll do yourself. It won't be drastic with like 1 or 2 employees, but it'll happen like a little bit. And then when you start to add more people into the pie, you always sort of see a move towards that inefficiency.
And it's like the whole it's a net profit discussion.
Exactly.
Like rather have a staff of 15 people, but make 20% profit margins, or 5 people and make 50% profit margins, what does that look like?
And there's no right or wrong answer. It's just your choice, right? And what role you want it to be.
Exactly. Yeah. On the revenue side of things for the audience, on a per deal, it's like 18,000, but the direct mail right now is like 28,000, while cold calling and referrals about 7,500 a piece.
Nice. Okay. So your direct mail is crushing it.
Kind of, props that up a little bit.
Better.
But the blended, I think, is about right for my market, about 18K.
Yeah. Cool. All right. Yeah. So on our end, we're similar vein. We're a little bit more expensive. We also have a little bit of more waste in our business currently. So our total lead flow is at 197. Total contract signed so far is 25. And out of those 25 right now, our projected revenue is 415,000. We've had 4 flips that we're taking down, 3 that we're currently working on, 1 that we're closing on here this week, 2 novations we have going on. The rest have all been wholesales. Our total ad spend right now, and so we spend about $5,000 a month on radio, just kind of growing to take over brands, kind of our long play. So if you look at our actual like traditional ad spend, we're at 48,000 for the year, 48,180. Cost per lead, $245, and then cost per deal of $22.94. So our return on ad spend is about 8.6. If you add in that radio, everything comes down. But the value of the radio for us is we're trying to like carve out a bigger, just a kind of like brand presence here. And so we kind of view that more of like an overhead cost than like a marketing cost, but we still do put it into our general marketing budget. Right. So if we did that, then our total spend is about 62,000. But one of the biggest challenges that we've had is just like kind of inconsistency with our marketing and stuff. So we really face a lot of challenges with direct mail, which we talked about on the show, stuff getting delayed with the weather and everything else. But still, despite that, of the 25 deals we've signed, 16 of them are from direct mail. So what's that? 70% of our deals, 2 pay per lead, 3 of them from online PPC, 1 from cold calling that our lead manager kind of does on the side. It's not a cold calling company, so she gets slow, she'll get on the dialer, and then 3 from referrals. And so the benefit of having hedged the direct mail by having so many other things going on is if we didn't have, we weren't running any pay per lead, if we didn't have PPC going, if we didn't have a system, never person cold calling, right, we'd have only had 16 deals for the year, which would be very, very different sort of setup.
It'd be way worse.
Worse. Yeah, we probably would be sitting down at about your revenue, Dylan, but with 3 times the spend almost. Right?
Yeah.
And the other thing that's interesting though, so like, what was the number, Mike? 400,000 that we've got?
415,000 is our total expected revenue for the year so far.
And all of that is, not all of that. What do you think? 80% of that still hasn't come in for the year?
Yeah. So Dan, our actual cash collected this year is only 106,000 so far.
Yeah. So 3/4 of it's out.
Yeah, is either in projected deals that should be closing over the next month or, that's not quite that long, like 3 weeks. And then some flips that we have out and going, right? And so if you look at like our total cash that's out, actually, let me look at the down payment, everything. If everything closes over the next like 3 months, say with our flips and everything else, between now, if we close no more deals between now and then, we'll have about a $600,000 swing.
I think said 4 flips. How much do you have, tied in down payments and carrying costs in those too? That's the other part.
Just tons, dude.
Yeah.
We have like 150 grand.
Yeah. And so that definitely, we've got quite a bit of money wrapped up in those things. And then just being able to sustain not having the money when you think you are. I mean, we, for some reason, like we've always had to deal with weird shit. This is off market real estate, but this year we're currently actively working on a lawsuit where a seller backed out. We've got trust title issues, like trustee title issues, where we've got this one deal. This is wild, dude, where like this guy says that his job is to be a fiduciary consultant, and he's somehow got this old guy to deed his house into a trust and then made him the trustee. And so he's the only one with the right to sell it, which we found, you know what I mean? Like, so we're just stacking up these title issues and they delay a week, a month, you know what I mean? And all of a sudden you're like, dude, we look great on paper, but you got to be able to still drop 20 grand in marketing to keep it going. And so that really hurts people. And then they want to stop marketing or they want to reduce their marketing budget until they get money in the bank. And it's like, you really can't do that. You've got to keep moving.
Yeah. Or you got to be able to hit the phones for 10 hours a day.
Right. Do something.
Totally.
Yeah.
Yes.
Yeah. And that's the dangers of like the smaller operators. And I don't know if even put myself in there, if you don't have some reserves in the bank, like this is where it's safer to wholesale than take one down because something could go definitely wrong and you could get screwed. I mean, that's the reality of it.
I know.
Well, that's one of the reasons this business is so hard though, right? Is because at its core, it's a debt-driven business. And there's it's a very expensive business to run. People don't realize that when they get sucked into wholesaling and flipping as like a get rich quick scheme is you need money to make money in this business, right? And the understanding like the ups and downs of the cash conversion cycle is really important, and like the velocity of money. Because like the funny thing is one of these flips that we bought it while it was slow. I will also say that we bought it while I was out of the country, so I did not get a say in it. But this deal,
I never walked it. I just was like, I think it's a good project. Turns out that might not be.
Yeah. Well, it's a decent project.
But it's a good project.
But it's taken so much capital, right? That comes out.
Well, there's some other caveats to it too. It's sucked up some caveats and way too much time just due to the contractor selection from a referral.
Yeah. And there's some little things there, but like we went against my own advice where I'm always like, don't get into these big flips when you're trying to, because this whole endeavor, we're trying to launch like a new endeavor with some new partners. So we're kind of going off of their financial tolerance and everything else. And I went against my own advice of don't buy a big flip too early because it fucks up your cash availability. And sure enough, what did we do? There's like $100,000 in that property almost right now.
Well, the good thing is Mike and I are capable of funding the entire business.
Which is what happens, right?
Which is not necessarily a good thing.
Yeah.
But like we are not, a lot of our listeners out there are people like you don't have that, right? Like Mike and I have had previous experience with previous businesses where we were able to have capital reserves and we're able to be like, okay, well, if you want to, I can loan on this one. Because the other flips that we've done, basically Mike and I have completely funded 100% of like purchase price, everything.
Yeah.
Out of our pockets because that's the only way to keep it going.
Well, the financial management is important. The conversion cycle, a direct mail lead is probably going to take longer from cash out to money in, versus a cold call might be quicker. So like if you're like just starting, like you want to like teach someone how to do sales eventually. My thing is just buy a dialer, Mojo, whoever, buy a list, just call people, get the reps in, and then just try to assign it to somebody. Reverse wholesale if you have to.
Don't try to do anything sexy.
I mean, and it works, right? The problem is most people don't want to commit that, but this is a Hormozy concept that I always like is there's 3 main resources in business, right? There's money, there's time, and there's energy. And if you don't have one, you got to make up for it with the others, right? If you don't have any money, you got to make up for time and energy. But it's amazing to me how many people don't have any money, but they still think that they are going to be like the exception to the rule.
Right.
They're like, I don't want to work. It's like, but if because I'm a special snowflake, if I spend $2,000 a month on direct mail, I'm going to get a deal from that eventually. I'm like, you're probably not.
Yeah.
Because also too, it's not like it's something that will compound over time, like where our average cost per deal from direct mail is, $3,000 or whatever. If you spend $3,000 over 3 months, that you'll get a deal too. That's not how it works. Because you're going to be mailing the same people or like new people. Like there's a compound effect that has to happen.
If you go and ask anybody, your first cost per deal is probably could be like $10,000, $15,000, $20,000 because you haven't done anything yet to have it any lower.
Mm-hmm. My PPL channel is a good example. I'm 11K in, no deals.
No deals. There you go.
What if I was just starting with it? Right?
Well, I say that, but actually you'd be where I would expect that to be, honestly.
Yeah.
But hopefully over the next several months, you can work those leads. You'll start to close something because the average time to start converting on a new lead channel is usually 60 to 90 days.
Yep. But if you're also sitting in the cubicle and you need to answer the phone call and you can't do it when you're working there, then you're not going to close that lead. Someone else is.
Yes. Dylan's going to close it because Tony's out there working it.
Totally.
Yeah. Right.
Yeah, it's such a different business than it used to be. And we've had people, that have come through Scale and stuff that have jobs and different things. And what do is they go home and they sit on their dialer for 4 hours in the evening and they're calling sellers and they're grinding and it sucks. And it takes them kind of 5 or 6 months to get it off the ground. But then once the momentum's there and they start working the old leads they generated and stuff starts to close, we've had several people that have come through and quit their W-2s to do that. But I never envy the situation that they go through to get there.
It's hard work.
Because it always sucks. Yeah. It's so much work.
They got to put time in.
Hey, so you've heard us mention our Scale community before, and I don't have a lot of time, so here are the quick highlights. In Scale, you get all of our processes and systems that we use to do about 150 deals every single year. You also get a community of investors that are verified crushing it in their markets. Otherwise, they wouldn't even be members. And that way you don't have to waste time with non-starters like you find in other groups. You also get preferred relationships with marketing companies and even lenders that will give you 100% financing. If you just heard all that and said, nah, I don't really need it, that's not going to help me, I don't know what to tell you. You're lying to yourself because all of those things are guaranteed to help you explode your business and buy more deals next year. So go to collectingkeys.com/scale and let's see if you qualify.
The other avenue to this too is I'm still trying to buy some rentals this year too. So it's how much should I stack? Because if you want to be quote unquote lendable to banks, they want you to see a big stack reserve, right? They don't really give a shit about the equity in a flip that you have until it sells.
Yeah.
If I'm making an offer on this 12-unit building, but I want to deploy more capital into the marketing, it's there's just another balancing act that you have to do for this and having a down payment and you have adequate reserves, all this stuff.
Well, and that goes back to your point about hustling and just wholesaling, reverse wholesaling, assigning your deals. If you want to get in, a lot of people get into this business because they want to make quick money and they want to buy rental properties. Buying rental properties should not be your priority. Buying flips should not be your priority as you're getting into this. It should just be to make those quick turns on cash and learn how to do the business. And then once you're established, now you can even maybe think about looking at rentals. Mike and I right now, we're not even looking at rentals. That's just not even in our purview. And we're pretty experienced. We probably could. It's just not our thing. Mm-hmm. You got a lot of experience, Dylan. Some of the folks, you just get over your skis too much trying to do too many cool, sexy things and you just spin your wheels. 6 months in, you drop 10, 15 grand and then you quit.
I think you guys do Scale. I've heard some of the conversations. It's if you commit to this and you go 3 months and you have to spend 15K, can you survive? Yeah. And that's a good litmus test for people to take, because if they can't, then it could go that way.
Right.
And at least you're not bullshitting and, promising too much.
Yeah. If you pay me 15 grand, I'll make you a millionaire.
Yeah, right.
I promise. Pinky promise.
Yeah. And it's just important, the whole point of this conversation is to have realistic expectations around kind of what it takes.
Exactly.
Right. And I think the biggest thing too is having the patience to, kind of chug along, try different things, and then having the discipline to actually track things correctly so that you can look backwards and you can make decisions on your business.
Yeah.
Right. And that's a big thing a lot of people don't do when they come in is they don't have tracking numbers. They don't have a CRM. That's one of my favorite things. And even successful people are this way. Dude, I get so freaking frustrated with GoBundance guys who are all high net worth guys who want to do this business but refuse to pay $200 a month for freaking RE Simply because they're I just don't feel like I need that. I'm going to use a spreadsheet. I'm how do you track anything, dumbass? Yeah. Oh, I have a VA who takes the calls and manually plugs them in. No, that's dumb. That's a dumb thing to do that's going to just lead to errors.
Pay $1,000 a month for a VA so you don't have to pay for a CRM.
So you don't pay $200 a month, right? No shit. But and just like setting yourself up correctly at the beginning, or at least like close enough, it will get you to the point where you can actually track your progress and make decisions on how to actually be effective moving forward.
It's very true.
Another thing about the quick money is you run your business better. And honestly, just probably sleep better at night if you have $100,000 in the bank.
Sure.
Right. You're not rash to make decisions like the guy earlier who's trying to squeeze stuff out of his tiny marketing budget. Like you get desperate, you try to make deals work. I've done it. I'm not immune to this when I was at the beginning, right? You spend 20 hours on a deal that was never going to work in the first place. And then you might hurt your reputation as buyers. Like, why is he sending this piece of crap out? Right. So there's just these downstream effects of not being in a position of power, especially when it comes to financial stuff.
You want to operate from a position of strength. Yeah. There's another podcast I listened to, and this is loosely related, but I want to drive the point home with this, is that they were quoting some famous person that wrote this in an article, that how people like the average Joe like us feel successful in life is that their stage in life essentially changes for the better year to year, meaning your net worth, whatever that means to you, grows year to year. And so when your net worth doesn't grow, like that's when you don't feel good about what you're doing. And so when you're coming into this from a position of strength, you want your net worth to grow. You want your business to grow. But what we've talked about this whole episode is there's these episodic ebbs and flows where it actually goes down and your cash position goes down and you're like, oh shit, like, am I going to lose all my money? Look, I'm worse off at this moment than I was 3 months ago when I started this. Now, oh man, I wasted money. What a bad decision. And you start spiraling. And in reality, you're just in this episode of like kind of going down before you can go back up. And it's always going to do this. But over the years, and Dylan, you can attest to this, it's going up, right? Up and to the right. But there are these downloads. It's just like looking at any graph in the stock market. So it's an interesting take for me when I heard that statement. And I was like, oh, I could see how that could really hurt people if you decide to call it quits at the wrong point in that cycle.
Well, like you guys talked about, it's better to track this stuff over quarters and not months, right? Like 1 month could look terrible, but your quarter looks good, even over on a year by year basis.
Totally. Yeah. I also think on that note, I don't know if I fully agree with that because I think that's determined by how much personal value you put on your net worth, which I think varies a lot.
Well, and I don't look at it as net worth, but that's why I made the comment of like, what is like net worth? What is your position in life? Is your position in life getting better or worse? And so if you feel like your position in life is worse this year than last year, you automatically don't feel good, like mentally, like you're not mentally healthy because of that.
Sure. Yeah. But like it gets getting into like philosophy of life.
I didn't write the article. I'm just saying it's a good observation.
Totally. But then I think also too, kind of on that note where the importance of the trends of that, right? Which is you always hear, I feel like it's like business gurus that are trying to, really, I don't know, flex or relate to the lay person. They'll say dumb shit like, do you know exactly how much money is in your business bank account right now? I check mine every single day. It's like, that doesn't freaking matter. And it's not a good representation of your actual situation, right?
I mean, I check mine every single day.
Yeah, but like, does it affect you emotionally if it's low?
It doesn't make me make a decision, no.
There's people that do that and they're like, man, it's low. I got to close a deal today. Yeah. I'm like, do you though? Or should you just focus on what's going to make you like quantifiably more money over the next 3 months instead of making a quick buck right now?
What's the time horizon which you're operating?
Yeah, there's a thing between like when you're maybe younger or even if you don't have any money, like when you're like, I don't have anything to lose.
Totally.
And then everybody gets to this certain step where like, I've actually accumulated some wealth. Now my priorities are changing to, I don't want to lose it. Right. And that number is different for everybody where that is, but
totally.
I'll actually say, I think that's a big reason that I've been drawn towards the lending piece, right? As opposed to holding rental properties, because rental properties have more downside risk that's out of my control versus doing loans, right? And so like, sure, there can be downside in like the market and different things, which I would still be exposed to via loans. But at least when I'm carrying the debt, I am able to service that debt at a discount. The other person is the one that's guaranteeing that for me. I'm not being guaranteed myself with a debtor that can come and take my ass, right? If the market goes sideways. And then also too, I am getting more recurring, consistent cash flow. I don't have to worry about all of a sudden a furnace imploding and needing to spend $10,000 to replace it. And sure, I will get less returns with my money being in loans than if I had built up a big portfolio because I don't have debt pay down, I don't have appreciation, I don't have tax benefits, all that sort of stuff. But At this current point, I'm okay with that because it will bring consistent growth and opportunity, which is what I want.
Yeah. I think if you think about it this way, here's another way to also put some perspective on it is 1% of $100 versus, 1% of $1 billion. Like kind of the bank model is like banks make small margins on money, but they have a lot of it. If you're investing in rental properties, the idea is you're going to get a huge compounded return because you're getting all these different, if you add up all the different benefits of owning real estate, there is some downside risk, like in all of those areas.
Yeah.
Where with the lending business that you're talking about, the downside risk is a little bit more limited. And because of that, you get a less return, but just do a shit ton more loans and then you'll still net more money.
Yeah, exactly. And there's also too, I went in this the other day, you always want to have 3 potential exit strategies with everything, which I really like this. And when it comes to rental properties, you really only have one exit strategy once you own it, which is to sell the property, right? When it comes to debt, you can either sell your debt, right? You can take back the home if things get weird and you can sue the person, right? Or you can basically raise money to replace the debt. So you still service it, but you basically get the money back, right? And so there's all sorts of different ways that you can structure it in order to get that money back, which is a lot harder to do with an actual rental.
One thing I guess too, it's like, as we're diving into these KPIs and these metrics, and if I'm looking over my business since, I guess 2023 is my first full year doing this. Like 2023, about a third of my business, I probably sold to hedge funds. And then that stopped abruptly. 2024, a third of my revenue is probably SMS. Then that stopped, right? So I don't know what it's going to be this year. That's going to, a third of it's going to go away. But each year, that revenue has basically still risen each time, right? And so it's the trend of what worked before may not work in the past, but you just got to figure out what does work and what's currently working.
Yeah. Yeah, it's fun. We've gone through as an industry through a lot of different changes.
We have.
There's been a lot of ways to make money, but those ways have also gone away, like you're saying with SMS and all these other things that just disappear. And so those things, a lot of people it was easy money, and the ones that are still around, like yourself, Dylan, are the ones that adapted and overcame when that revenue stream disappeared. That's how you stay in the business long term.
So with all the knowledge from Q1, what are you doing going into Q2, Dylan? Any changes in strategy, marketing?
Well, I think a lot of people overcomplicate it where they're like, I need to do this AI-focused landing page and all this bullshit. When in reality, just go back and look at your closed deals, see what list they came from, see what marketing channel they came from, and then do more of that. So I'll probably continue to do direct mail. I'm going to give PPL like 2 more months. And if I don't close a deal by like month 5, I might turn that off and try something else, or maybe try a different provider of who I use for that.
You definitely should.
We'll continue to do cold calling. And then, really what it comes down to is I need to find the balance of how much Tony, like my new AM, can handle. What is too much of a workload, and then kind of adjust from there. And I'm still handling all the dispo side, and I do want to buy like $1 million plus building this year. So that's one of my other goals.
Yeah.
Bingo.
I would say on that last piece, a decent AM can handle 80-ish active leads a month.
Okay.
Of like decent opportunities. At that point, they start to get a little bit frazzled, especially if they're at walking appointments, things like that. And that's sort of like looking at their long-term leads as well as their active leads. If you have a lead manager, you can stretch that number further. But that seems to be about the average.
That's good. That's a reference point. I had no clue what to look at before.
Yeah. And it's kind of like speculative. We haven't fully tracked that. I can just look at like a total leads that we used to generate versus the team size we had for each one. It seems to be about 80. And then if you bring in a lead manager, you can get it to like low hundreds.
The golden ticket for that is if you get your lead manager AM to be like friends and work together, like that lead manager is going to be helping them out so much.
Exactly.
Like they become a team, right?
Yeah. And we've started doing that where, Kimmy's the LM, and if she's gets an old lead, she'll at Tony in the little CRM, and like she knows to call, or he knows to call her. So it's been good. It's definitely a transition, and I find myself like with the team that I have now, one, I honestly work less than I have been, which is kind of different. And when the phone rings, I don't have this anxiety filled in my face. Like I have to answer this call. Like someone else is going to answer it. Or if he doesn't, I'll still answer. Like, don't get me wrong, but it's just different.
Can't turn that off.
Yeah, that's great. But and then on our end, what we're actually doing is we're consolidating our marketing and going all in on direct mail for the next few months, mostly because where we live is very cyclical based on the seasons. And April and May here are freaking red hot. And so that's what's proven to be the most efficient for us. And so even we've gotten opportunities from other places, we're going to put those on pause and just take the same budget and dump it all into direct mail to try and like kick up some additional opportunities.
Are you going to change any of the lists? Are you going to go deeper or market to more people?
Just going deeper. Yeah, bigger lists. Yeah. So we just did our marketing direct mail order for this month. It was 17,000. We just placed that yesterday, and it was basically just a much larger list.
Dollars or pieces?
Dollars. Yeah. So it's at 30 its postcards are like 35,000 pieces.
Yeah. Okay. Are you stacking that?
Yeah. All stacked.
Yeah.
Yeah. I mean, and like our actual stack list capability in Spokane and North Idaho is relatively small. So we got pretty wide into like seniors and just like kind of the big list too.
Yeah, that makes sense because I'm trying to think my own market. That would be a pretty big list for me to send out.
Yeah.
Yeah. And you guys got a bigger market than us, probably.
Yeah, I think we do.
Yeah. It's like 500,000 people is kind of like the whole like wider area. And we get out just with the rural spots too.
I have a follow-up question to that. Are you still sourcing most of your data from PropStream, or are you multifaceted in that?
Yeah. So we've been doing PropStream, and then what's the other one, Dan?
Deal Machine?
No, not Deal Machine.
Envelo?
Oh, Property Radar.
Property Radar.
Oh.
Yeah. Yeah. We've been pulling some of the niche lists off those and stacking those together. And so it's been interesting to see like certain list sizes, how they vary. And then some of the stuff that crosses over, some of the stuff that doesn't. Like Property Radar has a lot more like bankruptcies and liens and those sort of things. And, crossing the property like quality seems to be similar. I always like spot check stuff. I don't, it's just impossible to check it at mass, but we are very lucky here in Eastern Washington that the access to public data is very, very good. So we don't typically have the data quality challenges that some other places have.
Yeah. My main county, which is Hamilton County, is usually pretty good too. But some of the neighboring counties, you have to dive a little bit deeper in. Yeah.
It's challenging.
I used to have that web scraper that did like the bots for foreclosures and stuff, but something inside of Chrome or something changed and it like broke.
Oh no.
And which is fine. But now the VA does it, or not my VA, sorry, my assistant does it. And honestly, it doesn't take her that long and she's more accurate. So I just been rolling with that instead.
Perfect. Adapt and overcome, dude. Adapt and overcome.
Cool. Well, thanks for listening, everybody. Again, go ahead and send us a DM. I would love to know what your KPIs and marketing strategy is going into Q2. Get more leads because, I don't know, you might give me some good ideas. I'd love to keep expanding and growing because this industry is changing more and more as more of these different marketing types become commoditized. And, it's gotten competitive. Everything else has just been interesting to sort of see it unfold. But yeah, obviously, if you're getting deals done, you're finding out something that works. So I'd love to hear about it. So thanks everybody for listening, and we'll talk to you guys next week.
See y'all.
Thanks for listening, everyone. If you want more from us, you can shoot us a follow on Instagram. I am at Mike_invest. Dan is at InvestorManDan. And Dylan is at Dylan_does_deals. Shoot us a follow and send us a DM to let us know what you think of the show.